Can you ever get enough of a good thing? You know how it goes. You open the pantry door for some random reason, and just as you're closing it, well, it catches your eye. That package of chocolate chip cookies you forgot you even had. You get on with your day, but the yearning only gets stronger. You finally break down. You name your terms. Only two cookies. The rest is a blur. You stop counting after five, but you're positive you didn't eat more than 10. Well, mostly positive. Do you remember Alan Greenspan's famous irrational exuberance line? Well, it's often credited with popping the dot-com bubble. But here's the truth. That assertion is historically incorrect. First, some background. The iconic line was uttered during a dinner speech at the American Enterprise Institution on December 5th, 1996. And I quote, "But how do we know that irrational exuberance has unduly escalated asset values, which then become subject to unexpected and prolonged contractions?" And I end quote. That was it. Just one sentence. The shot heard around the world because the speech hit during trading hours in Tokyo. Markets sold off immediately, triggering a ripple that hit the US the next day and followed. But let's put that in context. The S&P had rallied 61% from early 95 through that speech. Greenspan was not necessarily calling out the rally. He was signaling concern about asset pricing. Asset pricing is a Fed code word for stock prices, and many Fed governors were worried that stocks were getting a little bit too rich. Just have a look at the price to earnings ratios at the time. The S&P 500 went from 15 and a half times earnings to almost 20. Now, even today, a 20 times PE for the S&P is considered rich. Then there were the tech darlings of the day, Microsoft and Cisco. Microsoft was leading the software revolution. Cisco was the pick and shovel for the internet boom. Sound familiar? Microsoft was trading at 46 times earnings and Cisco at 39. Those multiples were nosebleed high even by today's standards. For some perspective, General Electric traded at 14 times and Walmart at 18, and Amazon had no PE at all because it wasn't even profitable yet. So yes, you can see why the Fed was worried. The big monetary question was simple. Should they raise rates to deflate a potential bubble or wait until it popped and respond after the damage? Greenspan never said there was actually a bubble. He was just analyzing. He wasn't declaring. Still, the market sold off 5% from Thanksgiving highs. It felt like a big deal at the time, believe me. Does that sound familiar to you? Let's fast forward to today. The Magnificent Seven trades around 37 times earnings. Microsoft is back at 37. Nvidia is 51 times. You hear AI bubble or tech bubble almost every single day, and the S&P continues to ride higher, and it's pushing all-time highs in September, a month that has been historically the worst for stocks. So, do you sell everything and hide out in a bunker? Is this the handwriting on the wall? All right, take a breath. Here's the peculiar part. Greenspan gave his speech in 1996. The dot-com bubble, it didn't pop until the year 2000. That's almost 4 years later. In fact, the S&P 500 shook off the initial speech drop within a week and then rallied another 100% until late 2000. Microsoft's PE peaked at 78, Cisco's at 133. The S&P itself hit 30 times earnings. The pop finally came in 2000. After six, I repeat, six Fed rate hikes pushed Fed funds to 6.5%. With CPI running around 2%, inflation was clearly not the trigger. It was the Fed's decision to prick the balloon. Economic growth slowed and the US entered a recession. No surprise. And stocks cratered. Also no surprise. The S&P 500 fell 37% in a single year. The lesson? Just because stocks look rich doesn't mean that the party ends tomorrow. Sometimes, like with those cookies, you can keep eating a long time after you promised yourself you'd stop. Okay, eventually the bubble will burst. It always does. But it's the Fed that controls the pin, not some mystical market force or narrative. Until they decide to use it or until earnings collapse, this exuberance can run on for a lot longer than you think. So, Maybe the smart move isn't to panic sell. Maybe the smart move is to recognize that markets can stay irrational far longer than our stomachs can stay empty. So have a cup of tea and grab one of those cookies from the cupboard. And remember, the bubble doesn't always burst on words, it bursts on policy. So, your truth bomb for today is this: Greenspan's irrational exuberance didn't pop the dot-com bubble. The Fed did. And until policy or profits turn south, this party may still have some room to run. Join me every day for Wall Street Truth Bombs, where I drop them here before the market figures them out.